Welcome back to the Daily Rundown. Y'all hope your weekend topped off the tanks without any Monday blues sneaking in. Markets didn't hesitate to blast off today, sending SPY and QQQ to all-time highs on pure bullish juice. Tech's leading the parade, but with Powell's words dropping tomorrow, this could be the pivot that either cements the rally or, throws a curveball. You're tuned into the Stock Market Summary Series. We're going to get into what we're seeing in the charts, but before we do, just remember that none of this is buying or selling advice. We're just here to provide market commentary and trading education. Keyword being education. Nothing we say here is financial advice. Also, if you're liking these videos, do us a solid and give us a like. We'd really appreciate it. All right, with that said, let's get into it, y'all.
Yeah, today was definitely defined by conviction. The S&P 500 tracker, SPY, closed up 0.47%. And the NASDAQ 100, QQQ, right there too, up 0.48%.
Both hitting fresh all-time highs. That's serious momentum.
It is. Powered almost entirely by that AI momentum we mentioned last week. It just keeps going.
That really is the firepower right now. And, what's interesting is looking kind of under the hood. The Dow tracker, DIA.
Yeah.
A bit steadier, up only 0.16%.
Yeah, and it's high basing, just sort of sitting there in a really tight range.
Coiling up.
Exactly. And that structure is key. When you see an index like DIA consolidate like that, holding its gains in a narrow band, it's often building what you could call explosive upside energy.
Okay.
It suggests the big players, institutional money, they aren't really selling, they're waiting. So if tomorrow's news does spark a breakout, well, that move could be pretty dramatic.
Gotcha. And we saw small caps, IWM, they clawed back some ground too, right? Up over 0.5%.
You did, 0.58%. So maybe some breadth trying to return there, which is encouraging.
But the sector split today was kind of quirky, wasn't it? Really telling.
Very quirky. Only two sectors finished green.
Tech, obviously. XLK was up, 1.34%?
Yeah, leading the charge. But then consumer staples, XLP, took a serious beating, down 1.79%.
Wow. That's a big drop for staples.
It is. And when you see a defensive sector like staples sell off that hard, that's usually a big risk-on signal. It suggests the market's betting hard on growth and kind of ignoring safety plays for now.
Makes sense. And that risk-on feel showed up in some individual stocks too, didn't it?
Oh, absolutely. Apple kept extending its gains from last week.
Right.
But the chart that, for me, just screams technical perfection right now is ASPI.
Okay, ASPI. What's happening there?
Well, it popped right out of its symmetrical triangle pattern, saw really high volume come in.
Okay.
And now it's pushing up against that key resistance level, around $11.22.
So a real test right there. That ASPI chart sounds like a masterclass playing out live.
It really is. And it's a perfect example for a critical trading lesson, something we always hammer home. Anything can happen.
Right.
The bears might step in hard at $11.22, or the bulls could just slice right through it. Success isn't about fortune telling. It's about positioning yourself for the high probability setups, knowing your plan, and managing that risk tightly when the unexpected happens.
That discipline is crucial.
It's the core of what we teach, honestly. You have to be prepared.
Definitely. And speaking of setups, we're keeping an eye on SoundHound AI, SOUN. Might be one for the chart time homework list, watching for a potential test of its $25 all-time high.
Yeah, that's a prime setup worth tracking.
Now, shifting gears a bit. Today was purely technically driven, wasn't it? Like the market was just grinding higher without any major news catalyst.
That's correct. It was all about the chart structure and that existing momentum.
So all eyes are really on tomorrow, though.
Absolutely. Everything is orbiting tomorrow's main event, the Jerome Powell speech. That's really the only thing on the near-term calendar that could significantly accelerate this rally or put the brakes on. Traders definitely need to stay nimble going into that.
Good advice. As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat.
Okay, so looking beyond equities, crypto seems to be struggling a bit to keep pace, right?
Yeah, what's happening there? Bitcoin looked weak.
It did. Bitcoin slipped about 2.3% today. That pushed it back below both its 20-day and 50-day moving averages.
Oof.
And it's really just consolidating, stuck firmly inside that range we've defined between, say, 108K and 124K.
Still trapped.
And Ethereum.
Ethereum also took a pretty big volume hit today. And honestly, that bull flag shape it was trying to form is looking pretty poor now. Not encouraging for the bulls there.
So weakness in crypto, but the metals telling a completely different story. Exactly the opposite story. While Bitcoin's kind of stuck in the mud, gold, GLD, and silver, SLV, they just keep extending these really strong runs. Gold was up 1.73%, silver up 2.56% today.
Just powering higher?
And look, here's another piece of trading wisdom. Assets, especially when they catch this kind of strong momentum, can always go further than you think they can.
Good point.
Trying to step in and short the metals right now with this kind of strength, that feels extremely high risk. Identifying these strong continuation trends, knowing when to ride them, but also recognizing when that risk-reward balance shifts. Well, that's a major focus in the Grok Trade mentorship.
Makes sense. It's about recognizing those patterns.
It is. And days like today really highlight it, don't they? You see these clear divergences. Soaring tech, indexes like the DIA just sitting tight and basing, crypto trapped. It just screams opportunity for traders who are prepared.
For those who know what to look for.
Right. For those who have that framework to spot the high probability technical setups, manage the risk involved, and, frankly, have the coaching to navigate it. That's what the mentorship provides. Sparring setups, risk management, hands-on coaching, and, that ironclad promise we make to stick with you until you recoup your investment.
So, wrapping up, the upside bias. It definitely feels alive still. Fueled by that tech firepower, maybe with some metals muscle acting as a bit of a hedge signal in the background.
Seems like a fair assessment for now.
But here's the final open technical question for you out there listening. Which one breaks first? Is it going to be that high basing energy in the Dow tracker DIA? Or will Bitcoin manage to shake off that frustrating range trap it's been stuck in?
Interesting question. Be curious to see what people think.
Yeah, drop your thoughts below. We wish you all a great rest of your day, and we'll catch you in tomorrow's market summary.